You are listening to The American Soundbite, a podcast that features common sense thoughts of me, an everyday American. This is the start of the most valuable 10 minutes of your day, so congratulations on joining us. I'm glad you're here for the conversation today. Before we begin, I'd like to ask you to help out a friend, maybe a family member, or even a coworker. Someone who may be a little less conversive in the mornings, maybe not up to date on the current talking points, or just doesn't know the current events that are going on and isn't interesting when you're talking to them around the water cooler or the coffee pot or even before the Zoom meeting begins. Let them know that you start your day by listening to the American Soundbite, and they should too. They can find us on the Amazon Alexa by saying, "Play the American Soundbite podcast," by going to Apple Podcasts or Google Podcasts, or really anywhere podcasts can be downloaded today. So the government is in full transition mode, even though President Trump is still working on his legal battle to make sure that the votes that are being counted, that are being reported, that are being tallied are votes that were actually cast by actual Americans in the cities and the districts where they were cast. But nonetheless, the transition is underway. So it's kind of safe to talk about at least a little bit. What would your investments, specifically what will your Robinhood account look like under a Biden administration? Because it's about to change, and it's about to change drastically. I don't know if you followed much of what Biden did or didn't say on the campaign trail. After all, he spent most of it, well, not answering questions, not talking about what his platform was or what he was going to do. He has said both that he would cancel the tax break, increase taxes, but not touch your taxes, everybody else's, but yours are going to be safe. But one thing that he was pretty definite on is that he wants to raise the capital gains tax. He wants to double the capital gains tax. He wants to take about 43% of any gains that you make on the stock market and give it to the government because, well, you don't deserve it by investing your money and risking your capital. The government really is the one that took all the risk, and they're the one that deserves the reward. So they're going to take half of what you gain from the market to use for whatever they want to spend it on. So how does that affect you? How does that affect how you invest? And how does it affect the returns that you're going to make? Well, first of all, obviously, anything that they do that the Biden-Harris administration would change wouldn't be retroactive to this current year. So the first thing you want to consider is, do I want to sell some or all of my holdings right now, take the profit, even though it's going to be taxed as ordinary income instead of capital gains? But should I just sell it all now and take the tax hit on my income and not have to worry about it? Or do I sell a portion of it, reduce my risk, reduce what I might have to give to the government, and then plan on, and here's the key, anything that you sell while Biden and ostensibly whoever comes after him is in office is going to be taxed. But your holdings, the stock that you hold and that you're not selling, the stock that you're buying and that you're accumulating, isn't going to be taxed until you sell it. Well, unless Elizabeth Warren gets her way and then she wants to actually assess a value on all of your investments every single year. But I don't think that is likely to happen. So what they want to do is they want to tax when you sell. When you make a profit, give half of it to the government because they deserve it for, well, everything that they do for, well, they think they deserve it. So if they're going to take half when you sell, then there's a strategy that says you just don't need to sell. but that strategy probably changes what your current investment profile looks like on an app like Robinhood right now. Most people on Robinhood are trading rather than investing for the long term. And hey, with the market the way that President Trump has created it over specifically the last year, really the last 4 years, there are huge gains to be made in short-term trading, whether that's a day or a week or a month or a 6-month period. If your investments are anything like mine, in my 401k, in my IRA, in my other retirement plans, I'm up over 100% from the lows of March. And if those were accessible accounts and not retirement accounts, I could take that money out and I would be styling. But most people on Robinhood and other apps like that are trading. And so they're taking the profit as they're getting it. They're looking at huge 300% gains on some of these very risky and volatile stocks, and they're selling it and they're taking the income and they're enjoying life, which is great. Remember, when you do that under the next administration, you're going to be taxed at 50%. They're going to take half of it. It doesn't matter what your income level is. They're going to take half of it because they're going to assess capital gains on all stock transactions, regardless of whether they're short-term or long-term or anything else. So they're going to assess a tax when you sell. So if you simply find companies that are more of a long-term play, maybe companies that are paying decent dividends, companies that you know are going to outlast the Biden/whomever administration, whoever comes after Biden as president, then you can sell when there is a fiscal conservative president who will reduce said investment taxes. And that means that you have an opportunity to still play the market, still make incredible gains, but you need to start thinking longer term. Longer term than a couple days or a couple weeks or a few months. You need to start thinking multiple years. And this is a conversation that I was having with a group of millennials just recently, earlier this week. And, well, since today's Tuesday, you know that means yesterday. Anyhow, the conversation was strictly around the fact that if you want to avoid punitive and confiscatory level taxes, if you don't want them to take half of what you work and save and do responsibly with your money, then you need to change your investment profile. You need to look at companies that are going to be around long term. You need to not look for, hey, what's going to pop and where's the excitement right now? You need to look and say, what's going to exist in 4 years? What's going to grow at a moderate rate, maybe even an aggressive rate over that period? But what kind of companies turn a 6 to 8, maybe a 10% growth in their valuation year over year over year, and have a history of doing that and are likely to do that moving forward? Well, you could say some of the modern companies like Tesla would probably be a pretty good option. They're not profitable, but they're not likely to go bankrupt. There's probably one of two scenarios that are going to happen with a company like Tesla long term. They're either going to be successful and eventually find a way to become profitable, which means that they're going to continue to succeed and you're going to make money. Or they're going to continue to grow in their valuation. They're going to continue to expand their market share. And at some point, one of the big guys, although if you look at cash on hand, they are the big guy, but one of the companies who is profitable, who has maybe more stature in a long-term, moderate growth industry like the automotive industry, may take them out, may acquire a company like a Tesla or an NIO or any of the other, Workhorse or Nikola or any of the companies that are out there, right? So the play could be, hey, I want to buy this. I understand there's risk. I could lose the investment even as I watch it grow, but I know I can't touch it. If the gains are to 1, 2, 300%, I know I can't touch it or I have to give it away. I mean, think about it. If you double your return on an investment in a year or 2 years or 3 years, and you take it out, the government takes half of it, half of what you earned by your investment decisions and by your discipline and by your approach to the market. The government's going to take half. So instead, you need to say, hey, I'm going to hang on to it. I'm going to wait. And maybe in that time, the company continues to grow. They become profitable. And when I can sell, it's worth way more than it is now. Or they get acquired by somebody, and then I own stock in this larger company, and that continues to grow over that period of time. And when I do sell it, I've made a crap ton of money. So your potential in the market doesn't really change. But if you're against giving half of what you make from your savings, from your risk capital, and your ability to play the market, if you don't want that to go to the government to use on, well, whatever they deem necessary, then you have to change your approach. You have to change the way that you view companies, which means you need to do a little bit more research probably. You probably need to look at what's going to happen long term, who their management team is, what their background is, what kind of decisions they make, and what their strategy, not just short term, but truly long term is. It's hard to see that in a company like Tesla, which is our only being used as an example, because, well, their approach has changed dramatically over the last 10 years. Who they are, what they do, everything about the company and about Musk himself has changed drastically over that time frame. So you can't really look to the past to say what's the future going to hold. But if you look into their management team, if you look into the executives on the board and you look at the directors and at the executives at the operating level, you can see that there is a long-term strategy. And while they're certainly open to rapid change and development with the market, which companies like Ford and GM and Toyota aren't able to do, that there is some stability there. And they could be a good long-term play. Unfortunately, you're not going to be able to take your 1 or 2 or 300% profit out until the tax laws that aren't yet change after they do get changed. And that is going to affect everybody who invests in the market. It's going to affect everybody who saves for retirement. It's going to affect everybody's 401k and their pension plans and everything else. Did you know that 78% of the market, of the money that's in the market right now, is from pension funds? Big, huge pension funds like state teachers' retirement funds and big corporations' retirement funds, all kinds of union funds, is what really drives the market, because that's the majority of the market today. They're investing trillions of dollars compared to, maybe your, thousands or tens of thousands or even hundreds of thousands of dollars. It's insignificant compared to what they are. All of those companies are going to face the same level of scrutiny, the same penalty from the taxes that Joe Biden is not going to implement on you, only on everybody else. So it means you got to look at your strategy, maybe even look at where you're investing your money. Maybe a Robinhood doesn't work very well for a long-term investment. Maybe you need to look elsewhere. But you do need to change your approach, change your method of thinking, and realize that once he's in office, if that does all transpire and come about, that you are going to be required to change your investment strategy, and the entire world really will, because everybody's going to be hit with this confiscatory taxation. And therefore, everybody is going to be buying and holding longer term instead of trading, which means the volatility kind of balances out, but the growth happens more over the long term, which is how you need to start planning your investments today so that when it happens, you benefit more than people who wait until after it happens to start. So Biden's going to change the taxes on you and everybody else. The Biden presidency is going to change the way that you invest and change the way that you take the money out of your investments, whether it's your everyday play money, your short-term, long-term investments, or even your retirement accounts. And so it's going to affect how much you really need to save to be able to buy the things that you want, whether that's houses or boats or cars or a retirement. You're going to literally need twice as much if Biden implements his tax plan than you do today. So you need to start thinking about that now. You need to start acting on it now, because it is going to affect you in more than just one way. You have been listening to an episode of The American Soundbite, a podcast that features common sense thoughts of me, an everyday American. This has been the most valuable 10 minutes of your day, and I appreciate you being here for the conversation. Before you go, I'd like to ask you to, well, if you enjoyed the content, if you like the topic of today, if you like the program overall, click on that like button down below. It lets me know that you enjoyed it and encourages me to do it more. If you didn't like what I had to say, you disagreed with me, or you just want to argue, type it in the comment box. I do read those comments, and it affects a change quicker than you would think. Right next to the like button is the share button. Let your friends, your family members, your coworkers on social media know that you start your day by listening to the American Soundbite, and they should too. After all, it'll make a more interesting person, a more fun person to talk to and just be around. And that means you benefit. Thanks a lot for joining us. I hope you have a great day, and God bless.